Hey everybody, good morning. It's the 16th of April 2025. It's almost 8:30 in the morning here Eastern Time. The day has not yet started and we have had a very volatile year so far. What I'd like to do is do an update on the S&P 500 and an update on Bitcoin for those of you. If this is the first time that you have tuned in, what I will say is I do not like to be entertaining. I do not like to be overly emotional about the market. The market is what it is, and I'm here to just give my own opinion. This is not financial advice, and hopefully this is just one point of research for you to make informed decisions on the market. And before I get into all of this analysis, I just want to make sure you all know this is not financial advice. You are responsible for your own research. And again, hopefully this is just one point of research for you. So I'm going to go into the S&P 500. I'm going to look at Bitcoin. I want to keep this video in under 10 minutes. And again, if this is your first time joining, I'd like to get to the point. I don't like to, make really long videos. I want to make sure that every piece of information in this video is educational for you. If you want to have access to our Discord, which is where we share all of our trading ideas, where we do equity trades, we do day trading options, we do education, all different types of things on a regular basis daily. You can find all that information on BitDoctor.org. So let's go ahead and look at the charts. So what I want to do is I want to take a look at the S&P 500, and I want to take a look at my WaveMaster indicator. And again, this indicator is again something that I have been using for years. This is something that really has evolved, but really has not changed very much over the years. It took me quite a while to put this together and to calibrate it to the settings that have worked out very successfully over the years. But what I want to take a look at here is the S&P 500 on a weekly time frame. So what I'm going to take a look at here are really two areas of this. And so what I want to focus on is Fibonacci retracements, and I want to focus on the WaveMaster on the weekly. So I've already outlined and circled a couple areas here that I want to focus on, but I want to actually zoom out a little bit more, and I want to go all the way back to the 2008 bubble, to the COVID crash, right? So we had the 2008 bottom here. You'll notice that I took a Fibonacci pull and I started it here at the bottom of the 2008 the housing crisis, right? And that was when the S&P 500 was at about 670, so roughly there. And then we peaked during COVID, or right before COVID, up here at about 3,400, we'll call it, right? So we went from basically 670 to 3,400, which was, a pretty significant increase. If we put that there, that's about a 400% increase. And then we had our COVID crash. Now, I think everybody will agree that markets do not move in one direction, and there's always going to be a correction. And that's just a natural part of markets. Markets do that, right? And that's evidenced by what happened at the dot-com bubble, where we saw this huge drop here, 50%, and then the housing crisis, where we dropped 57%. Two significant events in history that caused over 50% declines in the S&P 500. But alas, here we are, 20 years later, and we are significantly higher than we were then. So again, just looking at this bottom here, the top here, we found that support at the 236 fib, which is an important Fibonacci retrace area. Dominant pivot low, very dominant pivot low. We can all agree with that here. We had a very dominant pivot high up here. We can all agree with that. We found that support at the 236. That's all I'm outlining here. And I'm outlining that because I want to take a look at the bottom of COVID to the previous all-time high, roughly 48.21. And what did we see throughout the duration of 2022? Okay, so let me just zoom in on that. Only on that. So you saw that I had the Fibonacci pull from the bottom of the COVID crash to the top of basically the end of 2021, right here at that 48.21 area. And what did we find? We saw a significant pullback, but support at the 236. And we saw a pretty decent bounce off of that from the low to the high, it's a 12.6%. If you were simply playing SPXL, which is just a 3x leveraged ETF, well, we're talking like a 36% rough gain that you could have made if, from the bottom to the top. And, typically people don't catch the bottom, they don't sell the top, that type of thing. But, you had an opportunity there, at least at that 236. Then we saw a rejection. So after the rejection, we broke the 236. So where's the next logical area that we would find support, even if you're not looking at support and resistance levels at all, and you're only using Fibonacci, the next logical area of support is going to be the 382. And what happened? We found support at the 382 to the tune of another almost 10%. So that, again, is a significant increase. Now, we did pull back a little bit more. We didn't get to the 50, but then we saw a 17% increase. Now, what I want to focus on here is when we got down here, look at the wave master. We had the green wave and the yellow wave on the weekly that were both oversold. And the red wave was basically there. And that, that alone resulted in a 17% increase. So again, I'm focusing on two things. I'm focusing on a Fibonacci support and resistance, and I'm focusing on wave master buy zones, if you will. So we got that, and we got a 17% increase off of that. Now, of course, we got a rejection, and I don't know if there's anybody that's watching that was around me back then in August of 2022. We were able to take a significant short position, and we were able to capitalize on a lot of this decline back then. It does take experience and skill to take advantage of some of these market movements, but we were able to do that. Now, when that happened, right, we were going to be waiting for a couple things, right? We were waiting for of support at the 50. We were waiting for maybe another wave master buy area, and we got basically both of those at the same time. The green wave got into oversold, and the S&P 500 tested at 3,500. Right there in October of 2022. And I'm saying all of these things because we have to learn from history in order to project what the future might do. Now, the situation now is different than the situation was in 2022. However, markets do tend to move and breathe in very similar ways. So I want to focus on that as we move forward and take a look at what the market looks like today. So what I did here is I was looking at all of this, and I was trying to make projections and models based off of historical price action. And let's go ahead and move forward. I'm going to go to a daily time frame now, and I want to move forward over here and take a look at what this price action looks like right now. So what we got is we had support at the 236, and at the time when we were analyzing this, we did have some support at the 382. However, as we do know now, that did fail. So the next logical area is going to be the 50. So what happened? We got perfect support at the 50. But now, if we take a look at the model from 2022, what ends up happening after we get that support? Well, if we take a look at the model, what's really going to likely end up happening, and I do believe that this is likely going to be the case, right? So what we're looking at here, and if we go ahead and throw a little bit of Elliott wave on this, we can count a nice A, B, C. We can get a little 1, 2, 3, 4, 5 out of this, right? We get an A, B, C. Then what are we likely going to get off of there? Likely we're going to get an A, a B, and a C, right? This is going to be a logical longer term correction, but likely we're going to see, price action move a little bit higher. But then I do believe we're probably going to move a little bit lower, and we're going to be looking at like a 1, 2, 3, 4, and going down for wave 5. And likely what we're going to be looking for is support at the 618. Now, if we get that support at the 618 later this year, that would be ideal, right? That would be the completion of a larger ABC correction. The bigger question, of course, is whether or not that is going to be the finish. Is that going to be it? But something that I do want to point out right now, and I think that some of this has already played out. Now, I did mention before, I'm only looking at Fibonacci retracements and Wavemaster. So this is the Wavemaster that I'm looking at here. Excuse me. So I'm looking at the Wavemaster here, but what I'm also going to be looking at is for divergence, right? So I'm circling this, but what I want to focus now is on the Wavemaster and the price action that we've got. So we have a low here, and take a look at the low that we've got here on the indicator, right? And then we have a much lower low, but then we have a much higher low here. So we've got some divergence that has formed here. So this is bullish divergence, which would indicate that we're going to see a bounce. Now, some will say that that has already happened on this day right here, on Wednesday, April 9th, when we saw a 475 point increase on the S&P 500. That was a 9.5% increase in the S&P 500. Very significant. I will not discount the significance of that. But what I now need to see in order to really get super bearish is I need to see this indicator right here, the green wave. I need to see this go up above this 63, 64 level, right? I need to see it get above here. Right, if we can get above that level right there, I'm going to go ahead and outline this in white. If we can get above that level, but the price action to stay below this level, then that would kind of maintain a bearish stance for me, because that would create some negative divergence. So that would basically be creating a scenario where we're creating a higher high on the indicator, but a lower high on the price. Lots of factors can go into the markets, and I don't want to make this too complicated for anybody that's new to trading, so I'm not going to talk a whole lot about moving averages or things like that. If you're already familiar with that, you can already see that on your screen. But if we can start to see some negative divergence, then I think we can start to talk about moving back below 4,800. But for right now, I think that the market is likely going to kind of move sideways between 4,800 and 5,800, probably for the next couple months. It's going to create a lot of short-term opportunity, but it's going to create a lot of boredom in the market. And that's really what they want you to do. They want you to get bored so that you walk away from the market with whatever losses that you have. When in actuality, what you should be doing is educating yourself and learning and building, right? Build your knowledge, build your knowledge, build your community, and put yourself in a place with people that really can help you. And I'd like to be, I'd like to be that person and to provide that community for you. So again, you can find all that information on BitDoctor.org. But if we do end up moving lower, which I believe we likely will move lower, I'm going to be taking a look at this 618 here at 4,500. And that is based off of, just to be crystal clear, we're taking the low here at that 3,500 level and the high here for the all-time high, and we're taking a look at a move down here for this 4,500 level. If we break 4,500, it becomes increasingly probable that we're going to revisit 4,000 and then potentially to make total revisit of 3,500 to reverse all of this work that has been done. Now, it's too early to say that that's what's going to happen, but that is something that we do need to pay very close attention to as price action progresses. But again, looking at the weekly, which we were talking about before, what I will point out here is all of the times that the weekly indicator has gotten oversold, we have seen significant bounces. Again, the weekly right here, 17%. The weekly oversold right here, 19%. Look at the weekly right here. Even with the yellow and the red wave and the white wave all the way up here in this, above neutral territory, we still saw this 27% move when we got the green wave all the way over here into oversold. And that's where we are right now. So again, I mentioned for me to be bearish, I need to see price action stay below 5,800, but for time to go by for the indicator on the daily to get a little bit higher. However, that doesn't necessarily mean that's what's going to happen. It's very possible we continue to just grind up and out of here. I don't think that this correction looks finished, but that doesn't mean that it is finished. So, just waiting, giving it some time. because I believe at this point in time we are likely going to see price action come back to this 4,500 area, which is where I will get more aggressive when it comes to my longer term accounts, and that's what you should also be paying attention to. Okay, so that was way too much time on the S&P 500. I'm going to touch on Bitcoin just very briefly here, because Bitcoin is one of those things where people get trapped a lot. People look for quick gains. I'm going to clean up a little bit here as we go. People look for quick gains, and that's really not how you should be treating our good friend Bitcoin here. So what I want to do is I want to take a look at longer term cycles. I'm going to go to a weekly here for a moment. I've got a lot on this chart. So from a time cycle standpoint, I've taken this peak right here, which was the high in April of 2021, and the high point here, which is in November of 2021, which again was also the high for the S&P 500 that we were also looking at. I'm not going to take a look at Fibonacci here, but what I will kind of focus on is our Elliott wave analysis. So I was looking at a WXYXZ to complete a larger correction, and then a 1, 2, 3, 4, and potentially a 5, right? If we've got a 5 here, that means we're going to be going lower, and I would pull out a fib on that. But what I really am interested in seeing is a pullback here to this zone, which is going to be at about 70,000. We'll call it like 68 to 70K. And that would be like a channel that we would be basically trading inside of. So this is my bullish scenario, by the way. What I would like to see is this, 1, 2, 3, 4, 5, and then working on this A, B, and then I really would like to see one more leg down here to this 68,000 area. If we can get that, and if we can get it in the next month, that would be ideal. Right? If it takes a little bit longer, that's okay, but the price target moves up a little bit as we go further because we're looking at this channel, right? And if this all works out, if the dollar index continues to drop, then I believe that not just equities but commodities and Bitcoin would be included in the bucket here. Gold, silver, crypto, all of that. And I don't mean crypto in general. I mean like the big cryptos like Bitcoin, Ethereum, Solana, Cardano. Those things will likely increase, along with the decrease in the dollar index. And I do believe that there is a case being made for a fall of the dollar. And so that's more more complicated than that I'm willing to talk about in this video. But when the dollar index drops, usually equities appreciate in value, and that's because when the dollar is worth less, that means that to make up for that, your equities are going to end up being worth more because of the equality in global markets. So if we can come back down here to 68,000, that's ideal. Then I would say that my price targets to the upside, we would need to see a couple things happen, right? First, we need to break this high here at about 109,000, right? A lot of people on the server sold at about 106, and I've started to buy Ethereum, not Bitcoin, but I do think that Ethereum is going to kind of pull itself out of the grave at some point, so we'll save that for another video. But to be doing some dollar cost averaging, keep it real simple. I think there's some simple strategies that you can make to work on a long-term portfolio. But really what I'd like to do is get a little more aggressive around 68,000. And then I'd be taking a look for, again, breaking 109, and then I'm going to be looking at about 120 to 130,000. And then I'll be looking for this level right here at about 153. And we'll call it an even 150. And where this comes from is this 2618, which is trend-based fib. We've got this bottom here, this top here, we're getting this pullback. So the 2618 is sitting right there, and it's there at 150. Doesn't mean we have to get there. But if we do, that's going to be an area where you're likely going to see some significant resistance. And if we do pull this back down here to 68, let's just go ahead and look and see what we've got. that 100% is also sitting there right at 150. So 150 is likely going to be where we're going to see some significant resistance, if we get there. Not saying when we get there, because we might not. But if we get there, 150 is going to be some significant resistance. And then after that, I'll be taking a look at a move up here to about 240. Now, that's not guaranteed, but if it happens, more than likely it's going to happen this year. And it's likely going to be another one of those euphoria cycles, because I don't think we saw euphoria in the market. Yeah, we saw it go up to 100,000, but nobody was really super excited about it. So I don't think we saw a euphoria phase in crypto. Now, if it's going to happen, it's likely going to happen this year. And, I was right about Bitcoin getting to 100,000. I still remember vividly being mocked on YouTube and on TradingView when we had this little pullback right here. I said, we are creating a higher low, right? We were talking about a low and then a lower low and a lower low. And then, hey, look, we've got a higher low. This is a break in structure. We look at structure. And well, what ended up happening? We went from this, this 53, 54,000 area, and we went up 100%. So again, I'm not saying that that's going to happen right now. I'm still saying that we need a lower low here. But if we get to that 68,000 area, you better be certain that that's going to be an opportunity to buy. And if you are interested in investing, you always need to take a look at your probabilities and make the decision that's right for you. But look at what's in front of you, look at what's presented to you. And again, this is just one piece of advice that you should be taking, or really maybe not advice, but just an opinion, because I think there is strong possibility that when we get down here to the 68,000 area, if we get down here, there's no guarantee, but if we do, and I think we will, that's going to be an area that you should be looking to be buying, because that's going to be a great retest, by the way, of these highs back here. If I extend this out, you can see that we've got a great overlap right there at that 68, 69, 70,000 area. That'd be a perfect retest, because we always talk about the structure. We've got a good breakout. Now let's retest that breakout, and then we can move higher. So this would be a perfect scenario. And that's what I'm looking at for Bitcoin. So that was roughly 12 minutes on the S&P 500, maybe 10 minutes here on Bitcoin. So if this video helped you in any way, shape, or form, you know the deal. Like, subscribe, share. If you need to get access to our Discord, need to get access to our trading ideas, whether it's equity, options, leaps, day trading, whatever your fancy is, we do try and accommodate for all of that. And if you're interested in trading futures or spreads, we've got several inside the chat room that do that as well. But you can find all that information on BitDoctor.org. And last but not least, wherever you are in the world, I hope you're having a great day, a great night, and a great evening. Take care, everyone.